Today I would like to analyze Carlisle companies, one of the biggest supplier of construction products that make buildings more energy efficient and also more resilient. If we're going to take a look at the stock price, we can see in the last 5 years we are up around 226%. So this is an incredible performance, and we're going to take a look at the financials to find out if this company is a good buy right now. The first thing we can recognize is the market cap of 16.55 billion US dollar. This makes Carlisle company the 9th largest building material companies in the world by the market cap. We also have a dividend yield of around 1.07%, which we can see here did grow in a very good rate in the last 10 years. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. So in 2020, we saw a revenue around 3.97 billion US dollar. This was an 11.4% decrease from 2019, so probably related to COVID. Then in 2021, we saw a decrease around 3.3%, so probably again related to COVID. In 2022, we saw the strong comeback with a growth around 42%. Then in 2023, we saw the decline again around 15.8%. And then in 2024, we saw the growth again around 9%. So I think a very inconsistent revenue in the last 5 years, but it's still a check here because we saw some revenue growth. The next thing we're looking for is a free cash flow growth in the last 5 years. The free cash flow is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So in 2020, the free cash flow was around 0.6 billion US dollar. This was a 1.3% decline from 2019, so probably related to COVID. In 2021, we saw the decline again around 48%, so again probably related to COVID. In 2022, we saw the strong comeback with a growth around 158%. Then in 2023, we saw the growth again around 32%. This is something we like to see. But then in 2024, we saw the decline again around 11%. So I think it's a very inconsistent free cash flow as well, but it's still a check here because we saw some growth in the last 5 years. If we take a look at the operating cash flow, we can see in 2020, 2021, and also in 2024, we saw a decline in the operating cash flow. But what I find more interesting is the cash acquisition. So we spent around 680 million US dollar to investing or to buying some company in 2024. But we also had the other investing activities where we got around 2 billion US dollar in 2024. So this means we sold some of our business, and we can see here in Google is tell us we sold the business for 2 billion US dollar. So I think this is also interesting to know and probably can also affecting the free cash flow in the future. The next thing we're looking for is a free cash flow yield over 4%. So this can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So what we're going to do now, we're going to take the free cash flow from 2024, so around 0.95 billion. We're going to divide it with the current market cap, 16.55 billion. Then we're going to get the free cash flow yield for 2024. So the number we're going to get is around 5.74%. So I think this is a good free cash flow yield, is over 4%. So this could be an indication for undervaluation, and we like to see that. But I think we should also make some assumptions about the free cash flow in the future. If we ask ChatGPT, we can see here in 2025 we could have a free cash flow around 1.05 billion US dollar. In 2026 around 1.04 billion US dollar. In 2027 around 1.12 billion US dollar. So I'm not sure if these numbers are realistic. So let's assume for 2027 we can reach around 1.05 billion US dollar. So let me know in the comment if you think this number is realistic. So then we're going to divide it with the current market cap, 16.55. So then we're going to get the free cash flow yield for 2027 with our free cash flow assumption. So the number we're going to get would be around 6.34%. So again, I think this is a good free cash flow yield. This could be an indication for undervaluation, but this is only if the free cash flow can continue to grow. The next thing we're looking for is the debt to free cash flow ratio under 5. This means the company can pay back the debt with the free cash flow in under 5 years. A very important number, because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So what we're going to do now, we're going to take the long-term debt first. So this is around 1.887 billion US dollar. Then we're going to add the short-term debt as well. So the short-term debt is here around 3 million US dollar. So then we're going to divide it with the current free cash flow, 0.95 billion. So then we're going to get the debt to free cash flow ratio for 2024. So the number we're going to get would be around 1.99. So this means a little bit under 2 years we can repay the debt with the free cash flow. So this would be a check here, and we like to see that. We can also take a look at the cash on hand, how much money this company has in the bank. We can see here around 0.75 billion US dollar, and I also think this is a good amount as well. So overall, I think this company has a very good balance sheet. The next thing you're looking for is the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So we want to see a low number here. So first we're going to calculate the enterprise valuation. This is the current market cap, 16.55 billion. We're going to add the debt. The debt was around 1.89 billion. We're going to take minus the cash, 0.75 billion. So this would be the enterprise valuation. Let me calculate it quickly. So the number we would get would be around 17.69 billion. So this is how much the whole company is worth. We're going to add the debt, going to take minus the cash. So first we're going to divide this number now with the free cash flow. So this would be around 0.95 billion. So then we would get the ratio that we're looking for 2024. So the number we would get would be around 18.62. So this is a good number, I would say. Is under 25, so the check here, and I think we like to see that. So this number can indicate that this company could look undervalued right now. We can also calculate this number for 2027 with our free cash flow assumptions of 1.05 billion US dollar. Then we would get a different number. So the number we would get for 2027 would be around 16.84. So I think this is also a very good number. It could be an indication for undervaluation, but of course we need to see the free cash flow to continue to grow in the future. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that, especially we think the company is undervalued. So we're going to take a look and we can see, yes, this company did a lot of buybacks since 2016, and in some years even over 4%, sometimes even over 5%, and in 2023 even over 6%. So that are very high buyback rates, and I think we like to see that because this company also looked undervalued many years. So I think this is a good thing, and I think this is the main reason that this company is up 200% in the last 5 years, because when you do buybacks, this can also help the stock price to increase as well. I would like to give my conclusion about this company, so let's start with a positive. So I think we had a decent revenue growth in the last 5 years. I also think we had a decent free cash flow growth as well. I think the balance sheet is looking very good with a low amount of debt and a good amount of cash on hand. The free cash flow yield around 5.74% is also looking quite good, and if we can continue to grow the free cash flow, we would have a free cash flow yield around 6.34% in 2027. The enterprise valuation to free cash flow ratio around 18.62 is also looking good, and this can be an indication for undervaluation. And in 2027, with our prediction about the free cash flow, this number would be around 16.84. So I think what I also like about this company is the stock buybacks. This company buys back a lot of the shares many years in a row, and I think this is the main reason for this high performance in the last 5 years. We are up around 226%, and I think the stock buybacks helped a lot about this. If you found this video helpful, don't forget to like and comment and subscribe for more content.